Good morning. Welcome to a point and figure chart review of the Nasdaq Composite and the Nasdaq 100 Index. We'll start with the 100 by 3 point and figure chart of the Nasdaq Composite Index. We've now had a steady uptrend, very strong rally in the Nasdaq. It took out a couple of point and figure charts targets recently, 5,100, 5,500. The next one is the 16,300 upside target, which is this old high there. Recently the index managed to break past the 16,000 zone there. Now this 17,100 target is about just under 7% away. In view of where we are on a seasonal basis, we can expect some form of a consolidation of this recent rally. It's a pretty strong rally that started back here in October, end of October of last year. So it's been a very strong performance. So I do expect some form of consolidation in the market in and around this cluster of upside targets. If we get a 300-point reversal to the downside, that will signal the end of the current trend, and we'll get an O printed in a box next to the X's there. That will signal that then we might be due for a correction. Downside risk targets is a 9.95% correction down to 14,400 roughly. The 15,000 trend support line would come in there. The 8-period moving average there can be a key support zone, but in view of February seasonality, there is a risk of a 10% correction in the Nasdaq Composite over the next couple of weeks. It's an unconfirmed target, so when the chart starts to reverse to the lower side, it needs to break past that low there to confirm the downside target. So we can expect a 300-400 point consolidation from this high back down there, but that would still not affect the overall downside target. So there's downside risk in the market of about a 10% correction from these elevated levels. From the Nasdaq 100, I've got the 100 by 3 point and figure chart up here. We can see since the market made a very strong reversal back here end of October last year, and this is when that rally started. We had a couple of upside targets, 16,700, 17,000, 17,200. All the market met all these targets, managed to break past that resistance zone there. Then there was 3 more targets, 18,100, very close to that zone. Hit the 18,000 target there, not yet. It's very close. The high was 17,987, so very close to the 18,000 target there. 18,100, 18,002, and 18,003 is the next upside targets in this market. Do you expect some form of consolidation in and around these targets, since we are moving deeper into February on a seasonal basis? Could see a brief pullback or correction like I've had there, a couple hundred points to the downside. Downside risk, if we get a larger correction, about 8 to 10% down to 16,400 and 16,000 there, where the moving averages come in. So there's the downside risk in the market. But we've met these couple of upside targets very close to 18,100, 18,200 and 18,300, not far from those targets. But I do expect some form of consolidation long before we get to these higher, much higher upside point of figure chart targets. So downside consolidation risk in the market. We do need some form of a bit of a pullback. There's too much euphoria in the Nasdaq right now, Nasdaq 100 Index right now, AI euphoria. So do expect some form of a pullback on a seasonal basis post the earnings season. So things to look out for is a 300-point reversal to the downside. We'll put a O next to the X down there, then we know we due for that consolidation, and we could see a couple hundred points to the downside in terms of downside consolidation. But so far so good, very strong rally. The point and figure chart reversal at the bottom here in end of October, beginning November last year, gave some really good trading signals, as well as it break past that resistance zone. There was another signal there, and then we had a lot of breakout point and figure chart breakout buy signals on the Nasdaq. If we take our analysis one step further and we look at the Nasdaq Composite Index from a Ichimoku cloud chart perspective, we can see we're very close to the all high of 16,212 there. That should come in as a key resistance zone. Will be interesting to see if we're going to get a breakout past that, but we are going into a seasonal weak period. February normally is a seasonal weak period in the market, so we could see a consolidation. Maybe this week it'll hit that upside resistance target and then consolidate back to the turning line of the cloud there, as well as the standard line of the cloud there. So this standard line is expected to provide support. So the downside support target is this 14,375 for this quarter, and we could see a consolidation back to test this 15,381, but only if we're starting to see a sell-off coming through at the 16,212 upside resistance target. A little bit extended from the top end of the cloud on a weekly basis, and we can also see this move is almost equating that move there. So we've got the 2023 rally and now the 2024 rally coming through there in the cloud chart. Looking at the daily, very extended from the top end of the cloud. See rally, consolidation, rally, consolidation, rally, consolidation, and the downside targets would be for support 15,582, where the standard line comes in, the top end of the front end of the cloud at 15,412. so these are the downside risk targets if resistance holds at the 16,212 zone. So be aware that we could see a bit of a consolidation here, maybe back down to a March low there and then continue the rally from there. But we do need some form of a consolidation. We're a little bit extended from the top end of the cloud. So that's the interpretation of the Nasdaq Composite from an Ichimoku cloud chart perspective. Very close to the upside, the resistance target of 16,212, and then we've got consolidation risk back down to 15,582 and 15,412 for the quarter. Taking a look at the Nasdaq 100 index, very extended from the top end of the cloud, is ripe for a consolidation of critical reversal. The old high there of 16,764 is a new support zone that can be tested in February, beginning March, with the top end of the cloud yet 15,873 as the next support zone. And by that time, the standard line of the cloud would have caught up with the support zone there. But a little bit extended from the top end of the cloud, so we can see a bit of a correction coming in the next couple of weeks, consolidation on this weekly chart. Interesting to note that this rally, when it started there in 2023, you can see a nice strong rally, consolidation, strong rally. Interesting that this chart pattern here is an upward continuation pattern. It's almost complete in symmetry, that move is equivalent to that move there. So we are completing an upward continuation pattern, and we're going into a February seasonal weak period of the market, post earnings season, so do expect some form of a snapback or consolidation just to digest these gains. Basically that move, and then also that move, so we can exceed this kind of pattern, a Fibonacci retracement, a shallow retracement, because you get shallow retracements in strong uptrends, so we could see it to come back and retest these top end cloud and old resistance levels for support. So that's the picture on the weekly. Let's take a look at the daily. Very extended from the top in the cloud now. Beautiful rally, cloud cross buy signal there in the index. Rally, pullback to the standard line, rally, pullback to the turning line, but the standard line is now the new support zone. So the top end of the cloud here at 17,338 is a new support zone there, and by that time the standard line would have also caught up, so we could pop that line in there so we can see this zone there. Well, it could be a critical support zone. We are close to upside point and figure chart targets 18.2 and 18.3, so could see a bit of a climate run up to that, touch that, and then pull back and consolidate, because we are going into a seasonal weak period in the market. So be aware of that. A little bit extended from the top end of the cloud, so there's downside risk in the current rally. Looking at the market in terms of risk, the concentration risk on the Nasdaq 100, you can see this is the equal weighted index, only up 16% for the year, for the last 2 years, whereas the Nasdaq 100 is up 26. But year to date, let's just look at one here. You can see how the Nasdaq 100 has been running away the mega cap stocks. That's heavily weighted indexes now, adding to the market risk, since we're up 24% equally weighted and up 45% in a price weighted as the Nasdaq is. So there we go and see this downside risk in the market as the top mega caps is really running away with the rally year to date. I can see there we're only up 3.4%, whereas we're up 6.7% for the Nasdaq there. So there's downside risk in this market, a little bit top heavy in terms of the Nasdaq 100 and Nasdaq 100 equal weighted. So just back to the cloud watch out, we are a little bit extended from the top end of the cloud, so there is downside risk post this earnings season, as well as the seasonal week period February to a March low. So the top end of the cloud is the new support zones for Q1 of this year. Until next time, happy cloud chart trading. Bye for now.